Hi, so today I'm going to be sharing with you I'm going to be talking about S-Corps, and this is around this time of the year is when a lot of people are kind of considering making an S-Corp election. And so this video, you're going to find it helpful in helping you decide if it's the right time for you or not. But before I go right in, I want to introduce myself. My name is Taiwo Agbaje. I am a tax strategist. I'm also a certified public accountant, and I run an accounting firm outside of Austin, Texas, where we help home care agencies, physician, medical doctors, as well as real estate investors to help them strategize legally to save on taxes and put financial structure in place so they can save, they can grow their wealth. And so this video, I'm going to share with you the key considerations you need to know before you make that S-Corp election. But before I go right in, why do you want to, why an S-Corp? Why do you want to elect an S-Corp? You may have seen it, talked a lot over the internet that you should be an S-Corp, you should be an S-Corp. So this video is going to help you determine if it's the right choice for you. Now, the first thing you want to know is that the benefit with S-Corp is that it allows you to save 15.3% in self-employment taxes. And so if you have a business, let's say you have a business and you made $100,000 in profit, if you don't make an S-Corp election, you are going to be paying, in addition to your federal taxes, you will be paying 15.3% in self-employment tax. Now, when you make that S-Corp election, the 15.3% is not going to be limited. You're only going to pay 15.3% on the salary portion of your profit. If you take, for instance, the same $100,000, if you are an S-Corp owner, you are now required to put yourself on reasonable salary. So you're going to put yourself on, say, for instance, if you put yourself on $40,000 in salary, the $60,000 that is left out of your profit, you do not pay 15.3% taxes, self-employment taxes on that $60,000. So what does that mean for you? It means that if you have a business that is profitable, really profitable, you end up having a higher portion of your profits as distribution. And by doing that, you avoid paying 15.3% in self-employment taxes on your business. Now, think about people that make about 7 figures in profit in their business. That's a huge amount of savings right there. So that's the reason why people, you may want to consider S-Corp election. And so for the considerations, for most of our clients, we don't discuss S-Corp election until we see them make about $60,000 in profit. So when you make up to $60,000 in profit, that is when we begin to make that, to have that conversation of converting to S-Corp. And that's because we also look into some analysis of the QBID, Qualified Business Income Deduction, in addition to some other compliance costs that comes with it, to make sure that the benefit outweighs the cost for you before you make that jump, before you make that transition. Right now, the key considerations, again, the first thing is that you have to understand your numbers. What is your profit? What's the profitability from the business? If your business is bringing in money but your profit is non-existent, S-Corp is not the right choice for you at the point, because your cost may be more than your compliance cost may be more than the benefit you're getting out of it. So the first thing is, of course, knowing your numbers, your profitability. Then the second thing is that you also have to put yourself on a reasonable salary. I talked about that earlier on, and that's because it is compulsory that you put yourself on a reasonable salary as an S-Corp shareholder. And when you do that, now you have to, if you don't have payroll set up, you have to work with having a payroll system set up. You have to periodically run payroll. You also have to have, if you're using a payroll company, they will be responsible. They will help you do all of your payroll filings quarterly and at the end of the year. But just know that that is an extra compliance that comes on top of the already compliance that you have with your business. So that's the second one. Then the third one is that now you have to prepare an extra tax return, 1120S. The 1120S is the tax return for S-Corps, and it is a pass-through entity. S-Corps are pass-through entity. As a result, when you file your tax return, your 1120S, you do not owe any taxes on the profits. You will not see a tax due on the tax return. That's because the profit from the business, from the S-Corp, is reported on the K1, Schedule K1 for the individual shareholders to be able to utilize it to pay the taxes on their personal tax return. So S-Corps are also pass-through entities, and the entities themselves at the federal level do not pay taxes. The profit on the business is paid by the individual shareholders on their K1, on their 1040 through the K1. Now, having said that, there are also certain states that still impose taxes on S-Corps. So while you may not have taxes due on the federal side, you might have taxes due on the state side, depending on the state that you live in, right? So, but the important thing is that now you now have to file an 1120S. The going rate for an 1120S right now is about $17.50 or more, depending on your state and your city. But just know that that's an extra tax filing that you have to do. Now, as if coming out from that tax filing requirement, you are now required to have good and accurate set of books, because now with 1120S tax return, you will need a complete and accurate set of profit and loss statement. You will also need a complete and accurate balance sheet. If you don't have a bookkeeping system that does all of that for you, you are now required to have one, because your tax preparer or whoever does your taxes will need a complete set of financial report to prepare your 1120S tax return for the S-Corp. Then the last one is the basis tracking. Now, as an S-Corp owner, you are now required to track your basis. The basis in your business is the capital you contributed plus accumulated earnings and profit over time, less any distribution you've taken out from the business. Now, look at it as more like the equity in your business. The reason why you have to track your business is because it determines how much you can take out from the business at any point in time. It determines how much distribution you can take out from your business. If, for instance, let's say for instance you have a basis of about $60,000 in your business, and you needed to make an investment in something, or you needed to distribute to make money out of the business, to take money out of the business, and you needed maybe $70,000. If your basis in the business is $60,000 and you are taking out $70,000, that means that you're taking more than the basis. You have $10,000 distribution in excess of basis. That $10,000 is going to be taxed as the capital gains tax rate. You're going to be faced with a capital gain tax on the excess distribution of your basis. So that is why for S-Corp owners, it is also required. It's also your responsibility to track your basis, and whoever is filing your individual tax return, they are also now required to attach a shareholder's basis worksheet, so that when you've taken distribution that is in excess of your basis, automatically the software is going to apply a capital gains tax on that distribution. So it's very important to also track the basis. So in summary, the 5 things you need to consider is your profitability. Number 2, the requirement for payroll and salary for the shareholders. The third one is that an extra tax return 1120S that's been required to be filed. The fourth one is that now you are now required to have a good bookkeeping system in order to be able to generate good financial report for your tax return. And then the fifth one is that you are now required to track your basis in the business in order to be able to take distribution that are not taxable. So these are the 5 key considerations you need to be aware of. And if you have an existing S-Corp and you feel like you are not doing any one of those things, definitely, hopefully this will help you, guide you through some of those things that you need to be doing to avoid your S-Corp from being revoked. Thank you so much. If you are new to our page, I would recommend that you also follow us on YouTube and click the bell so that you don't miss out on any of our upcoming videos as well. Thank you and have a wonderful time. Bye bye.